Welcome, everybody. It is NVIDIA's earnings day. Unfortunately, we lost Sami Abusaad and JR Romero today. So, of course, in the words of The Rock, I am going to go one-on-one with the great one. So I'm here with Derrick Oldensmith, and we're going to go through everything you need to know about the market right now, which looks like a kind of a sloppy mess. And we're going to get into NVIDIA earnings. Okay, so Derrick, yeah, I mean, like I said, it does feel like this market is in this sort of like sloppy back and forth, like where it feels like we're on the edge of disaster and then we bounce back. And it's this, I don't know if it's just confusion over the economic data, the tariffs, the Trump stuff, but what do you make of the environment now?
So the market environment went through a change with Opex, which is exactly what I've been saying for the last couple of weeks could potentially happen. To give myself some credit, I got to give myself some credit, Mike. A week ago when we were doing this show, the market was breaking out technically to all-time highs. And I was warning that there was a very high probability of a breakout failure here. And even though the technicals looked great, like they were going to break out, everything else I was looking at pointed that this was going to be a false move and that we were going to have a really fast move lower. And that would coincide with Opex, because what you have to understand about market dynamics in this current environment is we get so much vol selling. And what that vol selling does is the people who are on the other side of selling, like SPX at the money calls, are the market makers. Then those market makers develop what's called positive gamma at the SPX level. And that creates a very insulating effect on the market. Prior to Opex, we were at like 10 or $11 billion worth of positive gamma. What does that mean? It means if the market goes up 1%, it's met with $11 billion of selling. If the market goes down 1%, it's met with $11 billion of buying. That's a lot of money. It has a very insulating effect on the market. But when Opex comes around, that rolls off. And you get a huge drop in those gamma levels, which allows the market to loosen. So for the month of February and the second half of the month of January, whenever we had these little dips, they were immediately bought back up, and then the market was looking like it was breaking out. But now the environment has changed. The environment has changed. The market dynamics have changed. We are in a feedback cycle where selling can lead to more selling, and there's nothing to stop that except for corporate buybacks, really, or possibly NVIDIA's earnings if it absolutely crushes it, because that reduced gamma actually works both ways. It loosens the market in both directions. It can make the market move much higher, much faster. It can make the market move much lower, much faster. So even as the market was breaking out a week ago, I was net short, and I was telling everybody this is probably going to be a breakout failure. That's what I was positioned for. So this move that we got over the course of the last 3 days, there is no surprise or confusion to me about this market at all. This makes perfect logical sense on what happened. Yesterday at lows, we hit extreme downside extension. And by that point, I finally covered all my shorts. I was short MSTR, I got out. I was short Meta, I got out. I was short TQQQ, I got out. I've been short Palantir. I got out of Palantir even at $86 yesterday, though I've now reshorted a little bit of that. And then I actually flipped long at those lows because of the extreme downside extension. I got long Meta. I got long Amazon. I got long the TQQQ. I flipped a bunch of those positions. This is an awesome trading environment when things loosen up a little bit because you can make money on both sides. But the big picture market dynamics are still, I believe, leaning towards the bear side of the market unless NVIDIA can come through and save things. So this market makes perfect sense to me, and I'm absolutely loving it.
Okay, yeah. So Derrick, you did it. So Derrick, everybody, if you were here last week, you would have heard Derrick predicted specifically a breakout failure just when it looked like we were sort of breaking out of that that range. It looked like we were going to explode. Okay, so do you think that sort of like hypothetically, NVIDIA, well, let's just assume they blow out the numbers across the board. They throw water on the DeepSeek story. Do you think the market will actually reward good news at this point?
Yeah, I do. I'm not sure if inline is going to be good enough, but if NVIDIA does what it's done in the past, where it just posts mind-blowing beats across the board, specifically with their guidance, the stock's going to go up, and it's probably going to save the entire market. Because post-Opex, like I was just talking about, it enables correlations to increase again. There's a lot of charts out there right now that show that correlations at like a 15-year low. But as soon as we got through Opex, correlations were able to increase again. And we also know correlations tend to increase, especially on the way down. And we just had a pretty big 3-day down move. But NVIDIA has the capacity to fully save this market. I am not a bull, broadly speaking, on the indexes right now, even though I would argue that the technicals are neutral as long as we're above SPY 590, as long as we're above QQQ 510. I would say that the technicals themselves are pretty neutral, but I'm not a bull. I think that there is still more potential downside overall for the indexes, provided that NVIDIA doesn't do what it's done in the past. And I can't guarantee that it won't. This company has such a reputation for blowing every expectation out of the water. It could do it again today. It could save the entire market. I won't be surprised. But if you report numbers that are in line, or you report a miss on NVIDIA today, God forbid, then I think that this market ends up breaking yesterday's low at some point in the next few days.
Yeah, like I think it's interesting what you said, because it feels like a solid beat is actually in line for NVIDIA, because if everybody assumes they're going to beat 10, 15% on the top or bottom line, how much juice is left. So with a situation like NVIDIA, I think it's worth talking about how you deal with earnings. So, we've heard in our community with our contributors, it runs the gamut. Some people only take options. Some people deal with stock. What is your approach to trading earnings?
Sure. So obviously Sammy's the man when it comes to that, insofar as putting the positions on in front of the report. That tends to be not something I do. I will hold stock into earnings reports if it's a swing that I've been in for a while and I have a good profit cushion. And then I don't do anything special. I know that the news event's going to be there, but I just continue to trade the preset game plan that I already have if I hold something into the report. I will primarily only trade stock in an earnings name after the report. I see the reaction. I see the numbers. I know the measured move. I think that the measured move for NVIDIA today is a 10% move. So, could bring you down to 120, could bring you up to like 145. So I want to know what that measured move is. That tends to become an actionable place for me if I'm trading it after hours based on what the numbers look like. Though obviously there are plenty of situations where stocks on the earnings report exceed the measured move that's coming from the options market. That tends to be how I do it. Every once in a while, I will take options into an earnings report, but I'm 100% honest about what I'm doing when I do that. I'm gambling. And I don't think that gambling breeds consistent profitability. But who doesn't like going to Vegas every once in a while, especially on a really hot earnings report like a NVIDIA or something like that, where if you got a strong thought process or a strong feel, you know what, I'm gonna gamble today, as opposed to being a good trader. A good trader implements an edge that makes them consistently profitable. I'm going to gamble on some calls. I'm going to gamble on some puts or whatever it is, and waste a few dollars, or maybe I'll make a few dollars if I get lucky. But at that point, I really think I'm just getting lucky.
Okay. All right. I think it's interesting that you specifically use the word gamble. Now, you train a lot of traders. So Derrick has mentored hundreds, if not thousands, of traders through T3 Trading Group. So he's taken total beginners and helped them kind of get going. But do you actually advise like people you're training and mentoring to stay away from that? Because it does sound like it's something that's a product of experience.
Yeah, so I definitely advise newer, more entry-level traders or people who have smaller accounts to not gamble ever, first of all. And I also tend to advise them to not trade pre or post-market, because you really got to know what you're doing if you trade pre or post-market. There's less liquidity. If you're trading an earnings report after hours, things can move very, very fast. You can't use stop losses. You can't use market orders. At certain times of the evening, certain routes don't work. So the last thing I want to hear if I'm trading NVIDIA and it's moving like crazy is have some entry-level trader blowing my phone up because they can't get out of a position because they're trying to market sell and they don't know that market orders don't actually work after hours. So it's a dangerous game. And I tend to do pretty well trading after hours on earnings reports, because that's actually one of the times when the tape becomes very pure again. My background as a trader when I first started in the business was really more on the tape reading side. And now I tell people all the time, tape reading is a little bit of a waste of time. Like if you want to learn how to do it, sure, it's not even that easy to learn. You're better off learning your charts. You're better off learning your technicals, because reading the tape has gotten so difficult over the years. The algorithms are better at disguising large institutional order flow than they ever were previously. And there's so much noise in the tape and fake liquidity and stuff like that it's not worth learning. But after hours, when a company reports, a lot of times the robots turn off in front of a news event because it scrambles their system. They don't want to deal with it. There's too much risk. So you actually get a lot more human beings that are trading after hours. That makes the tape a lot more readable. And that's where I'm able to find a little bit of an edge. But with that said, there have also been times in which I've gotten absolutely burned trading stock after hours for the exact reasons that I just described. I remember trading Meta, I don't remember how many years ago. It was pre-COVID. It was probably still called Facebook at that time. And they had a bad earnings report. The stock traded down, but it traded down huge. So I took a counter trend trade on the other side. I went long. The conference call started. Mark Zuckerberg said something that the market hated. And whatever price I thought I was going to get out at, whatever my mental stop loss was, and again, it has to be a mental stop because you can't put actual stops out. You have to be able to cross an offer over the bids in order to be able to liquidate a position. So wherever in my head I thought I was going to be able to manage risk, whatever Mark Zuckerberg said on that conference call, that thing the stock just like evaporated. The liquidity just disappeared. And whatever I thought my stop loss was supposed to be, it was below it so fast. I had zero chance to be able to press the button to be able to liquidate my position. And I got burned huge. I still remember it very vividly to this day. So trading earnings after hours is not for the faint of heart. You really need to know what you're doing. It's much higher risk, higher reward.
Okay. So related question. So Derek is an expert on like market structure and literally how things work, how the dollars go from point A to point B. Is there any reason we're not going to get after hours options trading at some point? Because they're obviously moving equities towards 20. It feels like they're moving towards 24/7 or at least 24/5. Do you think we will actually get after hours options trading at some point?
So first of all, I appreciate the compliment, though I think it was over complimentary to me. I'm still very much in a learning process, even myself, on just all of the ins and outs of how a lot of market dynamics work. As far as options trading after hours, I genuinely have no idea. I mean, that seems to be the fad. Everything is going. I mean, everybody can make more money if things are open for more hours. But I think, as I've said on your show in the past, like the idea of 24/6 equity trading is my absolute and utter nightmare. Like, I'm so glad that I'm an equity trader and not a futures trader or a Forex trader, just because I get to sleep at night. As is, especially during earnings season, I have days where I will sometimes trade from 5 a.m. Eastern to 8 p.m. at night. And it's honestly, it's not healthy. It's not healthy. I do it once in a while when there's a lot going on and there's money to be made, and I'm a little bit of a crazy addict to trading. I love the game so much. That's not healthy. You give me this market that's 24/6. That's my nightmare. I a long time ago learned as an equity trader to not want to know where the futures are trading in the middle of the night, because I can't do anything about it anyway. The market's closed. I can't wake up in the middle of the night and go liquidate a position. I don't want to know where the futures are trading. I don't need that stress in my life. But Josh Leffler, if he's listening, loves to send me texts literally as I'm going to bed about the futures imploding, even though they're probably only down 0.3%. And and then next thing I know, I'm thinking about markets and I'm not sleeping. You give me a 24/6 market, now I want to know where the futures are. And if something's going on, I'm going to get out of bed at midnight and go trade. That's a nightmare. So they're probably going to do it across the board. They're probably going to increase the options hours. They're probably going to increase the equity market hours. I am so against it. But, what can I do? Can't fight the tide.
Yeah, I mean, sometimes I even wonder, why do we even have market hours anymore? Like, what's the point? If Apple's or NVIDIA is going to start trading at like 4 a.m, I don't know. I mean, maybe it's like part of just the demise of the actual like physical trading floors. But yeah, it seems like the overlords have no interest in work-life balance.
It's the demise of my sanity is what it is.
Yeah, it's kind of funny you bring that up, because like I've heard Scott Redler say like the exact same thing. He doesn't trade futures also because he just wants a break. He doesn't want to be like his entire life 24/7 wrapped around the stock market. It's
coming.
It's
coming.
And I don't know how people do like crypto, where it's like literally it never ever stops.
I don't know how they do crypto either, because it's all worthless.
Yeah, it's funny at T3, like I've busted their chops to management. Like, we should be accepting crypto as payment. Like I know people that actually do use crypto for like real transactions, but yeah, it's still like one of the funniest things is just asking somebody what Bitcoin is. Like years ago, I was trying to hire a crypto writer once, and I just kept asking them each one, could you explain what Bitcoin is to me? And the word salad I got was just mind-boggling.
Yeah, and I'm obviously joking a little bit about crypto being completely worthless, but I certainly get it. No one's been able to really explain to me, even still, like a very proper use case for it.
Yeah, it's like, I mean, the only like there are some e-commerce use cases where you can actually pay for stuff. The only one where I've met somebody in real life was, I know an attorney that does a lot of work with accused criminals in Colombia, and she used to have to fly back with like $50, $100, $200,000 in cash, and which was just a pain in the ass with customs. So she takes Bitcoin now.
I mean, that's what it's for. It's for the criminal underground. It's for
alleged. Derrick, you have to say alleged first.
Oh, the alleged criminal underground. I mean, I know all the time you've spent on Silk Road that you're probably pretty familiar.
Yeah, I'm like, outside of T3, I'm an arms dealer, among many other things. Okay. So I think we should go over some of the things you've talked about in recent weeks, like the China trade. Just again, another thing, it feels like it's going away, and then just like Alibaba comes back and just smashes everybody right in the mouth. So how are you feeling about China these days?
I am upset that I don't have a position right now, but I'm not that upset because I followed my game plans and I made a lot of money on the China trade. I'm fully out of the China trade at this point. I don't have I'm out of BABA, I'm out of JD, I'm out of Yin, I'm out of TIGR. Those are all the China positions that I'm in. I got really extended. They went to my targets. They paid me really well. I want back in, but I'm waiting for a setup. And I can't get a setup because it seems like there's new news coming out every single day that continues to spark these stocks higher and higher. It happened again today with JD owns part of a robotics company that probably will make robots better than Elon Musk ever will. And that stock broke up again today. And Alibaba had more news and it broke up again today. It's up 5%. I really want to get back into these things, but I need a proper setup. I still think even at these prices, fundamentally, they're extremely cheap. If you look at the growth that comes from these companies versus the forward multiple, they're cheaper than almost anything that's out there. Partially that's for a reason, because there's always a little bit of additional risk when you're dealing with a foreign nation such as China and owning their companies. But I don't think so. Not at this degree. I still want in them. I just have to wait for a proper setup because that's what trading is about. If you chase stock, if you chase price, it's going to tend to be a recipe for disaster, even if every once in a while it works out.
Okay, and it seems like you're still cautious on the broader tape here. Is there anything you still like at these levels?
Sure. So I am still cautious on the broader tape. I think that there are plenty of opportunities within markets as they move down for like shorter term strategical longs. And that's what we did yesterday. Relatively near index lows. Like I said, I got out of all my shorts and I bought the hell out of some things very aggressively. And I was telling my team through the virtual trading floor, guys, I'm buying Meta, I'm buying Amazon, I'm buying TQQQ, I'm buying all this stuff. They're day trades. We are oversold here. You have to remember, we're not in a bear market. I'm not even going to say that we're going to go into a bear market. We were in one in 2022. Sometimes actually, this is just a fact. The biggest up moves, the biggest, fastest up moves in the history of markets are within the confines of bear markets, because that's how markets work in bear markets. The tape gets much, much faster. So a lot of times the market acts a little bit like a rubber band. You overextend that rubber band, in this case, to the downside, like we did yesterday. And you don't have to be a bull. You don't have to be a believer, but you can recognize as a trader that there's going to be that big snapback effect sometimes. And I remember in the confines of that 2022 bear market, I made more money long than I did short, because we were able to so well time that downside extension of when that snapback was actually going to come in place. So yesterday was like a mini version of that. Day three down, they're destroying the market on day three. Amazon getting absolutely crushed. Everything is just like getting liquidated. And that was the opportunity then to look for that snapback. Big picture, I'm not calling for a bear market right now. I think that like a 5 to 10% market correction here makes a lot of sense unless NVIDIA saves the market. But a 5 to 10% correction, if you look at the SPY, that could bring you down to somewhere between 580, which is a huge level for SPYs, to as deep as like the 200-day, which is trading at about 570 right now. So, we're trading at 600 almost right now. So there's the potential of $20 to $30 of downside, I still think, relatively soon, of a continuation of the downside that we start to see over the course of these last 3 days, provided that we're not saved by a really good report from NVIDIA or something similar to that. And then I do also think that this is just going to continue to be a volatile market. And the main reason for that thought process, or one of the main reasons for that thought process, is think about the last 2 years. We just had 20% plus years in a row. And history doesn't repeat, but it certainly rhymes. And it can be a good gauge for you when you're thinking about strategy, big picture down to small picture. Historically, what have you seen when you get 2 massive up years in a row like we just had? Is the third year just tends to be a more choppy, volatile year. Maybe it will end up flatter, maybe we'll end up down a little bit on the year. I mean, would it be, God forbid we have a down 7% year after going up 50% in the last 2,
Okay. All right. Okay, Derrick, thank you for joining me. And shame on Sami and JR for ruining the whole day, but we had fun anyway. So, Derrick,
you're not even giving me my Tesla victory lap yet.
Oh, that's true.
I want to rub it in your face, Mike.
I forgot. So let's give Derrick the full applause. So Derrick was saying truly horrible things about Elon Musk and Tesla. He was very mean. It was not like him. Derrick is usually a very nice guy, but Derrick was brutal. But we allow it because he was right. So Derrick gets to gloat. He gets to go around and tell everybody in Idaho that he nailed Tesla. And yeah, Tesla.
Did you sell your position yet?
I did not.
Where do you have a stop loss, or is this just we're all the way in?
So listen, it's 5 shares, not 500, not 5,000. It's literally 5 shares, and I planned on holding them forever.
Forever, okay, fine. I can appreciate that. If the game plan is a forever hold, then I can appreciate that.
Yeah, it's I do think the future is electric cars and robots that fold our laundry and stuff. Okay. All right, everybody. Thank you for joining us. Good luck with NVIDIA earnings. Again, congratulate Derrick. He called the failed breakout in the major indices. And also Tesla and Palantir. He's been saying very, very unkind things, but he was right. Okay, everybody. Have a great day.
Thanks, Mike. Appreciate it.